How do you get your money back into the stock market? And there's three things I'm going to go over to show you exactly how to do this so you can do it in a methodical way so it does not hurt you and you literally get the best leverage on your money. All right, stick around. Hey guys, this is RC Peck, and I'll talk to you about how you put your cash back into the market. Now, this is really important because if you're all in cash, it's most likely because you're scared of what's going on or perceived what you think is going on in the market. Mostly because you probably read something or you've been taught to be scared, and we'll go into that a little bit. But the bottom line is your money is in cash. You now realize that being in cash is what's not best for you, but you don't know how to get it back into the market. So there's three things I want to talk about, three kind of points of getting it back into the market and why it's really important to do it this way. So whether you have your money in cash or don't, you're still going to get a lot from this video because it talks a lot about psychology, and really all investing is emotional investing and behavioral investing. Okay, let's get to it. So here's the first thing with getting your money back into the market. Just buy the index. So one of the first problems people have in getting their money back into the market is they go, oh, I had 45 symbols, or I had 48 symbols, or 79 symbols. And it's just like, it's so overwhelming to them that they don't know where to start or how much to put in. So my suggestion, the first suggestion, is just buy the stock market. If you're in the US, just buy the S&P 500 and reinvest dividends. Boom, right there you have one symbol, do it in all of your accounts, and you're gonna get a position. You're gonna get an investment that beats basically 95, 97, 98% of everyone over any 5-year period. And it's probably even higher if you reinvest dividends. Seriously, that's how difficult it is to beat even the S&P 500 with dividends reinvested. So the first thing is just commit to buying one symbol with your money. I know it's simple, and that's why it's so powerful. Okay, so that's the first thing. You buy one symbol, just buy the market. Now, if you're overseas, you can just buy all world XUS, or you can buy an all world index. Same idea, one symbol, just get your money into the market. Okay, that's the first idea. The second idea, or the second point is, so how do we do this? Like, how do we go about putting our money in? And whether it's 10,000 or it's $100,000 or it's $1 million or it's 10 million, it's still a lot of money to you. And let's just assume it's all of your money. Okay, you're gonna wanna step it back into the market in phases. And you're gonna wanna use time as a way to get back in. So day one, you would put a quarter of your money in. And then you wait 30 days. And literally all you'd ask yourself is the stock market higher? Is the price higher than when you put your first 25% in? And if the stock market's higher 30 calendar days later, then yes, you put in your second tranche, your second 25%. Then you wait another 30 days. And you ask yourself the same question. Is the stock market higher than it was 30 days ago? If yes, put your third quarter in, wait 30 days, ask the same question. So in this way, it's 90 days, day one to day 90. You're gonna put all your money back in 90 days. Okay, now if 90 days scares the bejesus out of you, you can just change it to 120 days. Instead of every 30 days, you can do it every 40 days. That's something you can do. But what you want to do is you want to have a methodical way of stepping back into the stock market and have the step back in be based on price. Now, if you get to one of those steps, whether it's the second, the third, or the fourth, and the market is not higher, just wait another 30 days and ask the same question. Is the market higher from when I put my second tranche in? And so what you're doing is you're combining time and you're combining price. And you're getting your emotions out of it, which are absolutely, it's gonna kind of pull down the temple on top of you. Okay, so that's how to get it back in. How to keep it in, and this is the third point I wanna make in this video, how to keep it in is you can use a very simple price mechanism. Now there are better price mechanisms, but this is a simple one and it is a powerful one because what it will do, it will keep your money in the market for the majority of the move higher. So if the market goes higher over 10 years or 15 years or 5 years or 25 years, those are all trends that have happened. This next step will keep it in during that time period. As long as the 50-day exponential moving average is above the 200-day exponential moving average on the S&P price chart, S&P 500 price chart, and I would include dividends, then you're fine. That will eliminate so much of the noise. If the 50-day exponential moving average breaks below the 200-day, then you can start the process in reverse. Every 30 days, you take a tranche out if the price is lower. And what you're doing now is allowing price to tell you when to be in or out, and not your emotions, not Facebook, not Instagram, not scary stories on any platform, but you're actually letting price tell you when to have your money in the market. I hope you like this, guys. If you like this video, I think you'll like my clarity and control training. It's completely free and it literally shows you how to get control back over your finances, over your financial house, over your portfolio. And what I've noticed with people over the last 2+ decades, the amount of time I've been working, coaching, guiding, and helping people is what people really want, especially my focus is working with men and women over the age of 50. Because by the time you get to 50, you start to notice what your big box advisor is doing is probably not helping you as much as they could. And so I focus working with men and women over the age of 50. But here's the deal. What I hear from all of them is, how do I get control back over my money? How do I get clarity back over my money? And that free course, Clarity and Control, tells you exactly how to do that. Thanks, guys, for being in my world, and I will see you on the next video. Of course, like this, leave a comment, tell me where you think I'm right, tell me where you think I missed it, and I'll respond to you. All right, take care.